infrastructure. Anish Damania, CEO and Head of Institutional Equities, joins us from IDFC Securities. Anish, do you think more than valuations and liquidity, should we start now worrying about the political setup, and it's time to ring in political commentators once again? Because frankly, that really has been we've had no political risk from last 3 years, and now political risk could haunt us.
Yeah, so with these bipoles, certainly that risk has come to the fore. But having said that, one talks about this no confidence motion. But just think about it. NDA still has, or rather BJP on its own still has the majority seats in the parliament. And why would anybody pass a no confidence motion? I think it is just to tell their constituency that look, we are trying to fight hard for your rights, and therefore we are even passing a no confidence motion. But I guess that is more political in news. My sense is that with this kind of a defeat, BJP will start working a lot more, and you will start seeing a lot more activity there. So to that extent, I would say it's good. Secondly, if I look at the data, then data is showing a lot of robustness. Last 3 months, IIP has been growing at 7% per annum. Your transactions data, which was muted till October of 2017, has since started showing a lot of strength, and it is strengthening every month. From about a 14% growth average, we have now come up to an average of about 23-24% on a YTD basis. So transactions denote that minute level of activity which is happening in the country. So I think economy is on its mend and it's picking up. And I would guess the market can keep on fearing about all these political uncertainties or liquidity flows. Liquidity flows is something which we don't know how long they will last or how long they will continue. So keeping that apart, our main area is to look at which companies will outperform and which companies will underperform. And clearly what we are seeing as a change in trend, that where earlier quality was the biggest criteria irrespective of the growth, now growth has become the biggest criteria. And if quality companies don't perform or are not growing, they have also started to underperform. So clearly the attention as a global growth returns, as local growth returns, attention has started shifting towards companies which have a promise to grow in future, and we'll see performance there. So our main job will be to kind of locate these kind of companies versus something which is not growing. And I would say that talking about political uncertainty which is not in our hands, or liquidity which is not in our hands, is going to be reported news rather than forecast.
Anish, the tide has turned and how when it comes to the banking space as a whole. My question is, do you think that the movement or the treatment being given to some of the private sector banks in light of this is unjustified right now, or it's due? And what would you believe the outcome will be now for this year when it comes to the banking space, PSUs and private included?
What we are seeing is that the continued marginalization of the PSU banks, and if you still see PSU banks still continue to hold a dominant position in terms of the banking wallet share, may not be in the profitability wallet share or the market cap wallet share, but they continue to still hold a sway there. Having said that, I think that has been eroding, and that benefit is going to the private sector companies. So I think that trend is expected to continue. We don't see any stopping of that trend. So in that sense, the private sector banks will continue to gain market share. They'll continue to gain market cap over the PSU banks.
How much of this consensus trade is of towards private banks is in the price. I mean, there's a reason why private banks are trading at these P multiples, because markets know that PSU banks will lose market share and private banks would, gain. And this trend, I think, has been there for last decade now. But my question to you is that if I scan through all the mutual fund portfolios, all the PMS portfolios, all of them have a very large exposure to private banks.
Yeah, that's true. Banking, if you see banking and NBFCs put together form about 28 to 29% of the indices, depending on which index you're talking about. So obviously, banking and financials are going to form a very large portion of the portfolio, and bulk of it is tilted towards the private sector. So that is going to be a natural weight in the portfolios of most of the funds. So I don't see any discrepancy out there. However, if this has gone for a decade, doesn't mean that it will stop and the reversal will happen. I think what is seen is that if it has gone on for a decade, maybe it will go for another decade. And as I told you, there is still enough large financials still being banked with the PSU banks, where the private sector can still keep on gaining besides the nominal growth in GDP which is happening. So it doesn't mean that the private sector banks won't become bigger than where they are.
Is it now too late to revisit IT, because suddenly IT companies are no longer value stocks? I mean, let's look at a case like TCS. The promoter has sold down 1.5% equity. The company at best for FY19 will do 9 to 9.5% growth, and the P multiple after the recent run up for TCS is at about 18-19 times. So for those who bought IT in the month of Jan, they may have hit a home run. But is it too late now to buy IT or chase IT stocks?
Yeah, I think what you say is correct. We feel that unless until the growth trajectory changes for IT companies, materially from the outperformance of the
Oops, I don't think we've got Anish on a great line. In fact, I was just going to ask him about the telecom space as a whole, and looks like they're failing us right now, and wanted to get in a view as well about, the upcoming IPOs, because there's going to be a ton of them right now. Bharat Dynamics, we're talking about HAL and Bandhan Bank, etc. A quick glimpse at the markets. We're off about 0.5% on the frontline indices, and now even the mid-cap index is giving up some of its early gains as we speak. It's just about breaking into the red. NIIT Tech is under pressure. JK Lakshmi Cement is looking a bit tempered, off by about 2.5%. Take a look at Mindtree. These are some of yesterday's stars, which are seeing a bit of profit booking today. BPCL and the entire oil marketing space, including IOC as well as HPCL, those are some of the stocks that are under pressure. Atul as well as Coromandel International, City Union Bank are down and out. Anish, I'll let you continue with your chain of thought. Go ahead.
Yeah, so we were sort of talking about whether it's in the price. I think for the private sector bank, it looks like the growth will continue. So long as the strong growth continues, I think the stocks will keep on performing. So I think that is a criteria which we are looking at. I wouldn't worry as to whether it has outperformed in the past or not. I would more worry whether this trend is going to continue in the future or not. And I think as it looks like, and as more of these scams come about, there is more thesis which is getting built at the trend towards private sector will continue.
Anish, it's quite hectic when it comes to the primary markets. You've got those big defense IPOs, which seem to be getting a thumbs up by and large from the analyst community, Bharat Dynamics and HAL, Bandhan Bank as well. What's your outlook, and is there any specific business model or any specific type of company that you would veer towards?
So it's not for me to talk of any of these IPOs. A, we are not bankers to them. B, the stocks are not under our coverage. But what I would say, IPOs in general will continue because there is an increase, there's continued momentum for newer companies as we go by. The only thing which I would sort of talk here is that most of them are getting richly valued or fairly valued, and you are seeing that performance of post listing performance has been weak for several IPOs and QIPs which have happened. So the primary market at some point of time will take a pause and probably will move towards more realistic pricing as we go forward. But I think again, FY19 is going to be a year of IPOs and QIPs which will continue.
Okay, that's the view coming in on overall IPOs in the primary market as a whole. What's the sense that you're getting when it comes to the auto space as a whole? Tata Motors continues to see pressure when it comes to the overall JLR volumes. You know, interestingly, we had a discussion on the EV space as well. Do you think that companies that are unable to play catch up to the newer technologies would stand to suffer, or does the concept of EV as a whole seem like too far to become an actual reality?
So what will happen is that you know, the basic underlying trend of performance of any company is going to be how it's going to deliver its earnings growth over the next 2 years. And clearly we don't see that happening too well in Tata Motors. Coming to electric vehicles, I think that has become the order of the day. But how much time it will take for them to develop that market, I'm not so sure. And I don't want to hazard a guess as well, because there are both pros and cons of both the areas. I would say that they will have some share, but the dominant share will continue to be of the fossil fuel vehicles. And I think what one needs to look at, you know, in terms of companies, is that where we can find companies which are indifferent to any of these changes in technology. And among the ancillaries, I think Motherson Sumi as a global player will be indifferent to actually this change in technology, and that is what we need to focus on. Coming on to the auto space in the country, we feel except for Tata Motors, almost all other companies should, except for Tata Motors and Bajaj Auto, we feel that there is enough momentum in each of the other stocks, be it Ashok Leyland, be it Maruti, be it M&M, or be it Eicher Motors. So we are fairly bullish on the auto space. That is an overweight sector in our portfolio.
Thanks, Anish, for joining in and giving us a viewpoint as to which sectors are your preferable bets, as well as your general mood for the markets going forward.